as a Waterford man living in your home turf of Knocktover, you're very welcome, Mr. Cody.
I'm trying to take over any of the rest of our county.
I'm trying to get it as far as Knocktover. I'm not too successful.
Oh, that would be really worrying.
I hope to see you in Croke Park in September or something.
It's a winning.
Can I start by asking you, Mr. Cody, from revenue's perspective, what is the difference between tax avoidance and tax evasion?
From revenue's perspective, the tax avoidance is legal. Tax evasion is not legal. Tax evasion, and one of the features, I suppose, that one of my colleagues always talks about, the difference between avoidance and evasion, is that somebody who's engaged in avoidance should have no difficulty telling us what they're doing. But somebody who's engaged in evasion will seek to hide and suppress it.
So tell me, tax evasion then is a crime?
Tax evasion is illegal.
It's a crime.
Well, if I cannot impose criminal sanctions, but we
from your perspective, from revenue's perspective,
absolutely.
Is tax evasion a crime?
Yeah.
Yes.
Absolutely.
Okay. Tax avoidance is not a crime.
Tax avoidance is not a crime.
Okay. And if tax evasion is a crime, is it a victimless crime?
I'm here as accounting officer for revenue. I'm not here to give kind of my personal views of things, but certainly I see tax as an absolutely critical element to the effective working of the state.
But there's always a context, which is the point I'm making. The context is if we have tax evasion, where people are evading paying tax, there's a consequence, because we all know that we have pressures on the public purse in relation to housing, childcare, health, all of those areas.
You won't find any disagreement from me.
Absolutely. So the more money that people evade paying their taxes on, the less money we have to spend on public services and other public spending. That's just, which means then there are consequences. Okay. So can I ask then about the tax planning strategy that was referred to by the Comptroller and Auditor General in relation to hospital consultants? And I know questions were put in that respect earlier, but I wasn't here for the first 20 minutes, so apologies if I ask some of the same questions. When did Revenue become aware of that tax planning strategy?
The timelines, our timelines, we started a process around 2010.
How did you become aware?
As I said in my opening remarks, what we did is we were carrying out an audit on a medical consultant, and there was one of the features of the case we were auditing is that there was an incorporation by that consultant, and we then looked at the case. It had certain features, as I outlined in the statement and is outlined in the Controller's report. What we did, as we normally do with cases, if we identify a case with features that we're not happy with, we then look at other cases to see, is this a common practice in the sector? And the Dublin region did work in 2010 to 2012, identified a number of cases. We then sought legal opinion in relation to some aspects of the transactions. And once we had received our legal opinion and expert accounting opinion, we then started to extended the project nationally, and then started to look at individual cases.
So when you worked out from that one individual, from then doing an examination, you found that it was more widespread. Yeah. Okay, so was there any evidence then that that strategy was being promoted?
I outlined earlier to Deputy McSharry that there was a number of tax practitioners were involved in developing the scheme and promoting the scheme.
And was it being advertised? Was there any evidence of it being advertised, or was it just discreetly being promoted?
We've seen no evidence of advertising, and the reality is when we're looking at sectors like this, there's a small community. You won't generally see this being advertised in the...
Okay, so I want to move now to, this is from the CNAG's report, Mr. Cody. So it's figure 13.2, and it simplifies it first, okay, because sometimes tax affairs can be made very complicated by people who want us to understand that it's all very complicated, but very often it's very simple. So you can see that we have the same consultant and on the same salary, and it works out how much tax they would pay if they paid as a PAYE worker, and how much tax they would pay if they went for the incorporated option. So we can see as if a consultant and the income from a hospital contract 240,000, and an estimated income, private income, by carrying out private practices 100,000, so a total income of 340,000. Can you see that from the left-hand side?
Yeah, yep. Absolutely.
You see the tax, obviously then they'll pay income tax on their hospital contract, which is a public contract, and on the private income then they would pay 52% tax roughly, which is 52,000. You then go to the incorporated, where they would pay their PAYE, I take it, on their hospital contract, but it's the private element of the income that's incorporated. And an example is given where, for example, they could pay themselves a salary of 40,000 and pay the income tax on the 40,000, but the 60,000 then that's seen as profit by the company would then be only subject to 12.5% corporation tax. And that means then that their tax liability will be 28,300 rather than the 52,000. So they saved themselves considerable money by incorporating, which is legal, isn't it?
Yeah. Incorporating is legal.
They can do it.
Yeah.
Okay. So here's a scenario then that I see, because we know that there is already public debate about consultants on public contracts, working in public hospitals, availing of public money, carrying out private practices in public hospitals. That's number one. That's allowed and that's happening, and they make money from that. So, as the example was given, public money from a contract, private money from income, even though they're practicing in public hospitals and they're benefiting from that. They're then allowed to incorporate the private income, and they'll save money from that to reduce their tax liability. And not only that, but there's a third leg to it that you found, not only in terms of the legal element of it, in terms of incorporating the private income, but they were then, as you put it, lumping everything in, and as high wealth individuals, claiming expenses which maybe they should not have been claiming. So in other words, even that 28,300 that they should have been paying, they weren't even paying that. There was examples of widespread abuse of that system. Would that be fair?
Yeah, as I outlined in my opening statement, we came across this. We identified tax risks, and it's like I remember when we saw the diagram in correspondence with the controller. Obviously, it has to be a simplified view to present it.
And I know there can be variances, but I'm just saying, in terms of the picture, consultants working in public hospitals, public contract, private income, availing of public hospitals to carry out private practices, number one. Number two, they can incorporate the private income, and that means they pay less tax on that. And then number three, which is the problematic one, potentially, would that be avoidance or evasion if they were availing of the expenses they shouldn't have been? Would you have seen that as avoidance or evasion? If
people are claiming expenses that haven't been paid, if you didn't have an expense and you claim that expense, that's not avoidance.
Okay, so you see it as evasion.
It's a deliberate,
okay.
As I said in my opening statement, we challenged these cases. We ended up with settlements. We ended up with penalties.
I fully accept that.
We cannot have penalties if there's not deliberate default.
Yeah.
That's just the nature of.
And I fully accept that. I'm just putting that on the record in terms of what you came across and what the practice was. Yeah. So we've established that. So then you were talking about, you gave one example of the child who would be more proficient in media platforms or software, whatever it is, and they were offsetting some of that in terms of expenses. What other examples was there in terms of fraudulent expense claims?
Like one of the things, large amounts of personal expenses were claimed in some cases. For example, and we've answered this in parliamentary questions as well.
Yeah, but you're here today, Mr.
Absolutely.
Cody,
no problem. I've no problem.
No problem. So if you can, please.
Nanny costs.
nanny costs.
And private home expenses.
Like what? Just elaborate on that.
I don't have the detail, but private home expenses are not business expenses. And like the reality is that
Plasma TV screens.
No, I can't go into. I don't have the detail of the individual claims. But we deal with this across a whole range of cases that we have settlements. That personal expenses are claimed as business expenses, and if we come across them, we'll add them back. And if it's anything other than carelessness, we will have to consider the issue.
But Mr. Cody, sorry, you have already said
absolutely
it's not carelessness, because this is the thing.
Oh,
right?
completely.
And I want to be clear as well. This wasn't some mistake. This was intentional. If you go to the trouble of incorporating part of your income, you do that because you want to reduce your tax liability, and that's allowed. Now, I would have my own view in terms of whether it's morally right, but it's allowed. If you then go to the further trouble of evading tax, that's intentional. You're doing it with intent. It's purpose-driven, right? That's what was happening here. And these are high-wealth individuals already benefiting from carrying out private practices in public hospitals. So the question then is, if you established that this was a practice in this sector, the question then is it a practice in other sectors? If we have individuals that can incorporate parts of their income like that. One example that jumps out at me is we have a lot of individuals who have multiple properties that they let out. They're landlords where they have multiple properties. Would there be examples in that area where individuals, if they have maybe 5, 10, 20 properties that they let, that they would do it through a company and that they would incorporate the profits from that? Because if you are a landlord, all of the rental income is taxable income, isn't it? Yeah.
Well,
yeah.
Income.
Yeah,
absolutely.
It's taxable income. Yeah. And but would it be possible then for somebody who had 5, 10, 20 properties and were letting the properties out, if they were, is it possible for those individuals then to incorporate that income?
Absolutely. Like the incorporation, public limited liability is a feature of the Irish system. There's most.
I know it's a feature, Mr. Crowell. I'm just saying that I'm giving you again, because we're looking at you came across examples of tax evasion in one area. You stumbled across it because of one hospital consultant. I understand completely that incorporating income is allowable, right? But then people were going further than that, and they were evading paying tax, right? So if it was done in this area, I think it's safe to say that that wasn't an outlier. It's safe to say that we could probably find similar instances in other sectors. I've given you one example, right, where there are, without doubt, people who have multiple properties that they are letting. They're putting their profits into companies, and then they're reducing their tax liability because it's incorporated. So would it be safe to say then that in those areas it's also possible that there was evasion in relation to expenses as well?
Deputy, it's safe to say that across the business sector that there is some level of non-compliance. That's why we have an audit programme. That's why we carry out risk-based analysis. That's how we carry out interventions across areas. And our results, and we talked about this last October, our risk-based audit interventions generally result in about 70% of an audit yield. Our random-based programme has a 30% yield. And of the 30% yielding cases, the vast majority yield less than 2.5.
Sorry, Mr. Cody, I have to put this to you. You only found out about what was happening with hospital consultants because of what emerged in relation to one consultant. So had you not, sorry, bear with me. Had you not done that, you would not have been in a position then to do the work you did to recover the 47 million, whatever it was that you recovered. So what I'm saying is that you can take it as read that that's happening in other sectors. I've given you one example. So given that, if I was in your shoes and you are the person in charge of making sure that we collect as much tax as possible, we already accepted earlier it is not a victimless crime. So in all instances where we have individuals who are incorporating private income, that would be, I won't say unusual, but it's private income that in normal circumstances should be taxed as PYE income. So in those circumstances, similar to hospital consultants, have you now gone through all the different sectors to see is there the same level of tax evasion in all of those areas?
Well, Deputy, it couldn't have been taxed as PAYE income because it was private income. So when you talk about the tax that was taxed, that should have been taxed as PAYE income, the issue is that this is not PAYE.
But it's income tax,
yeah,
sorry.
Yeah. But so the issue is that it has to be self-employed, incorporate, and then the risk. And that's what we do. That's our business. We carry out audit programme across all the business sectors. And when you talk about the idea that we stumbled upon a case, I disagree with you there. We carry out a regular review of sectors. We have a risk-based system that identifies the riskiest cases. We audit them. It's completely open to our colleagues in the Controller Auditor General to look at the areas of risk, and we have a track record of identifying non-compliance and following through. What we did with this is we identified the case, and what our auditors do, and what is just ingrained in the system, is that if we identify a risk and we identify an example, what we do then is say, are there other cases? And that's what we do. That is the activity that we do every year that we report on. So I'm not, I don't think we're disagreeing on anything, but I'm not completely sure.
If I can just ask one final question, would the Controller agree that it wasn't something that was stumbled across, that it was something that was done as part of?
I think the system of auditing that has been outlined is certainly it's planned, it's very deliberate, it is effectively targeting higher risk areas. I think we've established that, we've accepted that, and we discussed it at the last meeting where we talked about tax compliance. I'm not familiar with the specifics of this individual case that, if you like, got the ball rolling here. I think inevitably there can be circumstances that go unnoticed for a period, but I think over time, with random testing and with good targeting of taxpayers, most things should get a look at least, which allows you to identify, if you've got good antennae.
And given that you've used good antennae and that you have uncovered tax evasion in relation to some hospital consultants, what I'm saying is that does your antenna, and my antenna went up as well, tell you that there may be other areas now where this is a problem, and are you actively looking at those other areas? That's the point I'm making, Mr. Cook.
I'm tempted to say a one-word answer, absolutely, but I'd like to just talk a little bit more about what we do and what we're trying to do and our strategy of managing our case base, as we would call it. There's something like 850,000 cases that are subject to our REAP process. That's our risk evaluation. So all of them, every couple of times a year, are risk ranked based on all the information that we have in our system, third-party information and the rest. But what we're also doing is we're actually actively engaged in segmenting our case base. And what we're really trying to focus on are the cases that are below our large cases division, because these are the people who have they're high wealth individuals, and they also have opportunities. Deputy Burke was talking earlier about a relatively small building. They have relatively limited scope to do sophisticated tax arbitrage, as we would call it. So what we're doing right now, arbitrage is you're looking at the difference between the tax rates on income, on capital gains, and on corporation tax, and you're trying to maximise the benefit and minimise the tax you pay. So that's the tax planning area. And what we have done is we've identified the national case base that is below large cases, and we have a dedicated resource looking at profiling those cases, because the challenge for us is to try and ensure that we do not disrupt the compliant taxpayer and we focus our resources on the non-compliant. That's what we are trying to do, and every year it's an ongoing basis. The Controller talks about the idea that And I talked about this at an annual report 2 years ago. People asked about, how are you not on top of something happening now? And I kind of explained it a bit like, we're a bit like the people who deal with anti-doping in sport. We'll be here and we will come across it. If it's serious, we can go back. If it's an ordinary case, we can go back 4 years. But if there is serious evasion, we can go back longer. And so it's a bit like some of the information on offshore accounts. We will find people, but it may not be immediately, but over time we will find it because our data matching will improve. So what we're trying to do in these right now is improve our knowledge of the sectors who can do this type of stuff. I would suggest to anybody who's engaged in the abusive practice, when they move beyond planning, they are much better off coming to us before we come to them. And I think it's really interesting in some of the work, and again, it's in the Controller's chapter on medical consultants. The original cases that we looked at did not avail of the opportunity for a disclosure. So they felt, and their advisors felt, that this was unchallengeable. And I remember I walked into Philip Brennan's office one day at the early stage where it wasn't clear to us that we'd win these cases. And I looked at he happened to have a letter from one of the agents involved on his desk, which was a comprehensive rebuttal of everything we were trying to do. And there was an element of, imagine the cheek of ye to challenge the schemes that are set out. But what we do is that we follow these things through to the end.
Okay, I'm on the Murphy at this stage.